Life insurance, especially the term life insurance, should I buy it or not? Is it a benefit or is it a cost? And if I do buy it, how should you buy it? Should I buy it from an agent? Should I buy it from a company? What are some of the pitfalls? What things I should watch out for? Do I even need it? And if I do need it, how much do I need to buy? I'm going to address all kind of term life insurance related questions in today's video. As you guys know, my name is Deepak and I'm a tax code advisor. And when people come to me for a comprehensive consultation, which usually lasts 8 to 10 hours, where we look at all parts of your finances, including your education planning, your retirement planning, your tax planning, the whole shebang, we go through pretty much everything that's happening in your life. One of the topic that pops up always is insurance planning. Do you have an insurance? Who do you have it with? How much do you have it? Because insurance is a fundamental financial planning tool. It's the very basics of it. So let me explain to you what I mean by that. Let's say somebody is very young and they just started to earn. At this point, they have not really learned much about finance. Maybe they learned something in school, college, maybe from their friends, family members, and so forth. But if you expect them to know what bonds are or how do the bonds work, that would not be fair. They haven't really learned about stock market. They haven't really learned about valuations. They haven't really learned about ETFs, commodities, and all kind of other products, right? So they are still in learning phase. If something happens to someone like that, that can be devastating for the family because the person have not really yet invested anything. So in those instances, having life insurance is becoming really critical, because if something happens, you at least have that death benefit that can take care of your family. Second problem I see is sometimes people have debt. Now, sometimes people don't see mortgage as debt, but mortgage is still a debt. So when people have debt, and especially in markets where mortgages are, quite high, like jumbo loans, like sometimes I see people who have 1 million, 2 million, $3 million loan, and they see that loan as an asset because they think the property has appreciated so much. And property is probably an asset, but loan is still a liability. And the reason why it's a big liability is if you are sick or you're no longer there and you have this liability, will your family be able to continue their life without you? Will they able to manage that liability? Would they be able to manage that asset? Because so many times we see that people, when somebody passes away, people come and they say, look, we're going to dispose of that particular asset because we don't want to deal with that. So that's the second part. If you have a lot of liabilities, then having some sort of term life insurance also makes sense, because if you're not there, at least those liabilities will be covered. So at the bare minimum, if somebody doesn't want to do anything, my recommendation always is at least get enough insurance that covers your liability. For example, when you buy a house, insurance company requires you to buy insurance on the house just in case something goes wrong. If you have a fire or a flood or anything like that, because they want to protect themselves. If you don't pay your mortgage, they simply take your house. So if somebody is sick, typically, for example, I have a lot of clients who are in IT field. Many are doctors, and what happens is when something tragic happened to these kind of people, and when I say these, I mean the high W-2 earner people, they will still have a salary, but oftentimes that salary is cut in half. So it's not, if somebody's making 500,000, all of a sudden they're making 250,000 dollars. And then the illness can last maybe a year, 2 years, sometimes 3 4 years. So now salary is substantially reduced, and they still need to deal with all kind of stuff. And when that person passes away, then all these bills come due, and it just kind of turns into a tragic story. So keep that in mind. So if you have a lot of debt, you know that debt is compounding every single year. So if you're not able to keep up with those payments for, maybe a year, 2 years, 3 years, family have no choice but to sell off those assets. So those are the two, like urgent needs that I see for term life insurance when clients come to me. Now, what is term life insurance? I think most of you guys know it, but the way I look at it is something like, maybe you can maybe good analogy would be like leasing a car. It's temporary. You lease the car, you make a payment, and after a certain amount of time, you need to give the car back, and that's when the payment stops, and that's it. You know, um, but maybe even that's not really a good analogy, because at least in the meanwhile you got to use the car, you were actually driving the car. So I know insurance people often like to use this, but at least you got some benefit out of it. But in term life insurance you really don't even get that benefit, because unless something bad happens, you have zero choice of collecting from it whatsoever. So that's the idea behind term life insurance. Once the term ends, the policyholder must requalify for the new coverage. So if you bought the policy, let's say 5 years ago, 10 years ago, and that was your term, and now you want to go back and get an insurance because you have a need, guess what? You can't buy it anymore because it was a term policy. So that's another challenge I see. Another challenge I see is, especially when people have that policy from their work, and when they move away from that company, move into a second company, or sometimes that can take some time, maybe 6 months, a year of, during that time, if something happens, then you're without the coverage. So that's another problem. But the biggest problem, I think, is, let's say if you do have the term insurance from your work, and now few years down the road you want to buy insurance for yourself, again you might not qualify for that insurance. So I think if you can qualify earlier, that's in your favor. Now you might say, well, I don't think I'm gonna die in 5 years, 10 years. Okay, and that's not what I was talking about. What I'm talking about, people developing, you know, obesity, blood pressure, diabetes, heart problems, liver problems, lung problems. They're not going to kill you, but they're going to make it super hard for you to qualify at the life insurance. Um, at least that's what we see from people. That's what when customers come in, they that's what they tell us, that hey, I wish I would have done this earlier. And the people who don't have any insurance, they don't really even talk about it. They just think that they will be healthy forever and they can buy it whenever, which is so far away from the truth. So those are some of the basic stuff that I see. So when do I see people buying? People, I see people buying it for debt. I see people buying it for to cover liabilities. People buy it for future expense sometimes, right? However, I think big piece of life insurance is who you buy it from, because most life insurance agents, first of all, many of them don't really even call themselves agents. Sometimes they'll call themselves as the finance professionals. They might call themselves as planners or some sort of other fancy title. I've seen all kind of titles, but they don't call themselves an insurance agent, which makes it super hard for you to kind of really even figure out who you're buying it from. That's one. Number two, most of these people only get paid if you buy insurance. If not enough people buy insurance from them, they cannot really survive. They have no other income. So the problem with that is that they will do everything to convince you to buy insurance. However, buying insurance is a long-term contract. You are signing maybe 10 years, 20 years, 30 years contract, sometimes the whole life contract for the forever, and that can have some serious consequences. I mean, you're talking about making a commitment uh, for 300, 400, maybe even $1 million or more. Don't you think you should consult with someone who is independent, who can really review the policy and tells you the ins and outs of it? But at least in my career, I have never seen somebody who got their policy ever reviewed. Definitely never, even before they bought the policy, but even more importantly, even after they buy the policy. And sometime when they come in for consultation, I says, well, didn't your CPA or tax professional, whoever you work with, did they never ask you for the policy that, hey, let me take a look, let me review it, let me tell you what's in and out, what your agent might have missed? Never. Not once that happened. But if you set up a comprehensive consultation with me, I mean, that's like almost 100% we're going to go through that exercise. All right. So the point I'm trying to make here is, can you really rely on people to give you the right information who are trying to be your advisor, who are trying to sell you the policy? Unfortunately, not. At least that's in my experience. I think majority of the time they have no choice but to be a salesperson rather than being an advisor. And the reason is obvious, because that's the only way they get paid. And that's why I charge hourly to my customers, because that way I'm not under pressure that if for example, let's say if you come to me and you don't buy the policy, I would be thinking in my head, like, oh my God, I got to sell this policy somehow, because if I don't, I'm just wasting my time. But if I'm charging you for an hour and giving you my honest opinion, then that thought doesn't will never cross my mind. Like, if you buy something, great. If you don't buy it, at least you have some good information. At least, you know, it will come handy whenever you buy it. So that's the problem with industry. Is everybody bad trying to, and I'm going to talk about some of the minute points just in a second, but I want you to understand the psychology, some of these reasons behind what you're seeing. No, I have met some people who are honest and they give the right advice. And majority of the time, people who are giving the wrong advice is, yes, some of them are probably because of finance, but I think majority of them are, they just don't know themselves. In matter of fact, most of them are new. They might have wrote a policy for themselves, maybe for their friends or family members, and that's about it. They haven't been in industry for a long time. Ask them how long you've been around. 10 years, 20 years, how many policies you write, and have them give it to you in writing. That way you actually know. If they lied to you, at least you have a written proof. And I'm saying that because lack of experience is a big part of it, big part of education. I did not really good at all of this stuff on day one. I still remember almost 20 years ago when I was just simply asking Sanjeev some questions, and slowly those questions turned into knowledge. That knowledge turned into more interest. That more interest turned into a profession for me. It took me a long time to come here. So I think time does matter, because it takes long, and plus you have to survive in the industry for that long. If you're not able to survive in that industry, you'll probably most likely move on to something else. So anyhow, that's the problem with the insurance agents out there. So now I'm going to give you some tips, some real advice that you can use. However, before I give you that stuff, let me explain to you that every person is unique. So when I give you this advice, I don't know whether this is the right product for you or not. I don't know what your risk tolerance is, what other kind of risk mitigation strategies that you might have, what is your age, what kind of liabilities you have. So I don't know any of that information. I'm just giving you some generic ideas. So if you're interested in getting any kind of insurance, whether it's term, whole life, index universal life, or somebody else is pitching you some other product, and you want to learn for real what that particular product means to you. And I say that because, let's say if I talk about term life insurance, there are probably about, I don't know, 200 different type of companies out there who is providing some sort of policy. Which one is right for you, I don't know at this point. Okay, so please, if you allow me to explain you some of these important points, I will do that. But please don't hold me to them. There are many other things we look at when we do one-on-one consultation. So number one thing I like to see is that the company is very, very stable, and company is not governed by their stockholders. Because when companies are governed by stockholders, they need to return value to their investors. And that's a problem for me as a policyholder. So that's one thing I like to look for. Number two, I like to look for policies that offers quite a bit of flexibility. That means they have all kind of riders that I can buy if I want to at a reasonable cost. That's where the second problem comes in. I review the policies, and sometimes people are paying crazy amount of money for riders. They never ask the agent how much is this rider costing me, and nor does the agent tell them. And many times, the agent doesn't even know that that same rider is available at a cheaper cost with somebody else. They just don't know themselves either. So that's another problem I run into. So, looking for a policy that offers some flexibility doesn't really get me stuck in one place. Number three, I look for policies that can be converted into a different type of policy at some future date. Now, why that is important to me is because a lot of time people see insurance as something that your family gets if you passes away. But that's not actually true. These days, many policies, including whole life, index universal lives, as well as the term life, have something we call living benefits. So those living benefits can come in quite handy to you. So, for example, let's say you are in your 20s and 30s, you buy the policy for 20 years, and let's say it's year 19. And in the year 19, you discover that now you have some serious problem, some sort of health problem. That means the moment this term life insurance policy will expire, you would no longer be able to buy another policy. And if you are able to buy, it will be significantly expensive. But if you are able to convert this policy, then that's a win-win situation. Now you know that your family will be taken care of because you don't have to go through any health check, you don't have to go through any underwriting. Everything is already set. You just start making the premiums and you're good to go. So that's the third thing I look for. But even here comes a problem. The problem here comes is that different companies offer different rate for this conversion option. So which one is best for you? Once again, until I talk to you, I don't know. But that's another thing you need to watch out for. Not all term policies are convertible, so you need to be watchful of that. Cheaper policies like those from, I mean, I guess I should refrain from giving you a company name because that can get me in trouble. So let's leave that alone. But the idea is some policies, they will sound really cheap, but they're not really cheap because they're missing a lot of features. So it's kind of hard to really compare them with some of the other companies. So be careful with that. Another thing I like to see, or at least remind you about, is that imagine some same person, let's say they're 19-year-old, and let's say they got sick. Maybe they have a major heart problem, lung problem, cancer, or something that is just devastating. We know at that point nobody wants to insure that person, but if they have this conversion rider, they will be able to continue with that policy. But more importantly, for some of these illnesses, there are alternative treatments that are not necessarily approved in the US. So maybe, let's just say, you want to go to China or India or Caribbean, some of the other places where they have some sort of other treatment. Many of these policies offer living benefits. So you can, for example, you can say, I want 200,000, 300. It's up to you. It costs money. Nothing is free. And even if somebody tells you that it's free, all they're saying is that the cost is built into what they have quoted you earlier. So never buy this crap that is free. Nothing is free. We pay for everything in this world. But the point I'm trying to make here is, if somebody's policy is expiring when they're 19, and let's say they have $1 million policy with a $200,000 death benefit, don't you think it will, how much value that policy has if they can take that $200,000 from the insurance company and use that money for some of these alternative treatments? Because your health insurance is not going to cover it. Your family is worried about everything because you're not earning what you were earning before. Like it's your salary probably have substantially reduced, or you might not even have salary. And sometimes I see situations where the person who is going through this, they don't even have health insurance. So you can see all kind of situations can arise when somebody gets really sick. In this case, these living benefits could be like a lifeline. It can actually save somebody's life. So That's why I feel so strongly about that as well. So I look for companies that can offer that living benefit at a very significant um, discount, or maybe a competitive rate, you might want to call it, because not, I don't really believe everybody's is trying to make as much money as possible. So let's use the word being very, very uh, competitive. Another part is when you apply for all of this stuff, let's say you go for term life, you're looking for something that you can convert whenever you want to convert. You're looking for something that offers a riders, that, for example, maybe return of premium. That means if you get super sick, company will not just pay out the other benefit, but they will also return all the premium that you have paid into the policy. Um, so all that kind of good stuff. What I'm looking for now at this point is, how can I get all of that at the least cost possible? So for that, I have to do two things. Number one, I would have to know which company will most likely approve you at the most competitive price possible. So that's number one. Number two, I also need to prove to that company that you are a good risk to be taken on. Insurance companies don't want to take bad risk. It's not good for company. But if we are able to show that you exercise regularly, you go for regular checkups, you're a fairly healthy person, you're not taking stress, you're financially stable, if you're able to talk about all that and explain that to underwriters, then there's a good chance we can get you a better rating. How many agents out there do you think they go through all that process? They might do a screen share, they might come, they'll take an application, submit it, and move on. So that's another aspect of it. But at the end of the day, you know, it's really insurance. It obviously, this insurance kind of covers all kind of different risk out there, but you're still buying insurance. So, and I say that because sometimes people kind of try to pitch these products in a different way, and that can be very scary. I think you, as a consumer, should understand what you're getting into. It you're buying insurance, and you're buying insurance for a long term. So if somebody says, "Oh, you know what, buy it. Maybe you can buy something else in 5 years, ten years down the road," you probably could. But my question to them is, will you actually qualify for that insurance at that time? And what about the rates? So when you buy insurance today, you're locking in today's rates. Will you be able to get the same rates 10 years from now, 15 years from now? Probably not, right? So that's a key thing to pay attention. And lastly, I'll leave you with this. Is it better to buy insurance earlier or later? Okay. This is a tricky question because, like I said, some people will say, no, you should always buy it earlier. Well, doesn't really work, because what if you don't have any debt, your family is financially stable, everything looks good? Then do you really need it? If you have a good health insurance, you don't have any debt, and you guys are financially stable, why waste your money on insurance? Doesn't make any sense. But if you have not yet replace your W 2 income from your other investment incomes, whether it's coming through a fixed income or through dividends or through stocks or whatever, the real estate, whatever you might have going on in life. If you have not replaced that income, then it makes sense to consider some sort of strategy around insurance. So there's no right or wrong answer to this question, whether you buy it early or whether you buy it late. I think the real question is, do you have a need for insurance? So I think I have made it very clear to identify need. I'm sure if you need it by now, you know it. You can reach out to me, or just go to taxcodeadvisors.com, and from there you can contact me, call me, text me, WhatsApp me, book an appointment for 1 hour, and let's take a look at your insurance need. And once I know, by the way, just to be clarified, we only charge you for first hour, and after that, all the insurance services are free, so there's no charge afterwards. So it's not like every hour you get paid. Um, just for the first hour, because it's the idea here is to eliminate this thought process that I have to sell some product to a client. My job is to be an advisor. If somebody else has pitched the product, that's fine. You can bring the product, I can look it over. I can tell you what the tax consequence is going to be, other kind of little nuances that we have seen in policies. We can easily identify and let you know, so that way you can at least stop you from making a mistake. Because, like I said, it's not. For example, let's say if somebody pitches you, "Hey, this insurance is only going to cost $20 a month," and I see that because I get these mailers in mail all the time. Only $20 a month, $30 a month. You know, 99.999% of the time, that's waste of money. Because let's say even if you get it, let's say if, in a worst case scenario, something happens, bad happens to you, and your family able to collect it, how much difference is that going to make in your family's life? You see, like, would it really significantly change something? So if you're going to do it, wouldn't we have done it for different amount? Wouldn't we have added different riders? Wouldn't we have compared it with different companies? Wouldn't we have taken a different terms? Wouldn't we have compared it with different type of policies? Wouldn't we have covered different type of products? So all kind of strategies needs to be work together to ensure that you're getting the right product. But anyhow, I think you got awesome information about term life today. So at least nobody can fool you. You have some serious knowledge today, really, after this. In the coming days, I'll try to talk more about whole life, universal life, and many other fixed income products as well. Or in the meanwhile, if you have a question, concern, want to talk to me, obviously I run a investment a discussion channel. You can come through that, where we can discuss pretty much anything you want to do. No financial advice, no investment advice. I don't tell you what to buy, when to sell, but I tell you, you know the core of it. If something is good, why is it good? If something is bad, why is it bad? What are you missing out? The idea is to give you enough pointers so you can do more research. You can arrive at your own conclusion. Never take an answer from any financial advisor, in my opinion. I think you are your own best financial advisor. Nobody knows you better than anybody else. So if I'm telling you that, hey, look, I know something, I could probably know something, but I cannot make a decision on your behalf. Just not possible. I don't know enough. Even after 1 hour session, I might not be able to know you as much as you know about yourself. Even if you come through a comprehensive consult, which is about 8 to 10 hours, even after that, I wouldn't really know you. So one thing is, I never tell people what to buy, what not to buy, when to sell. You should arrive at your own conclusions. You should use advisors to get clarification around your questions, right? You'll be surprised how many times you'll get a different answer, because different advisors are looking at it from a different point of view. So that's what you should do. You should listen to different point of views and then arrive at your own conclusion. I hope you find this video helpful. If you know somebody who is thinking about buying a life insurance, please refer them to me or share the video with them. All right. Once again, thank you so much, and I'll look forward to talking to you soon.